Going. Good morning, everyone. Welcome to BizU. This is helping owners increase their bottom line. I'm Kim Sway, the admin assistant over at the Queen Creek Chamber of Commerce. Today, we're joined by Pam Johnson with State Farm Insurance. She'll be talking about small business retirement plans, why they're important for your business, and employees and different types, and which one is going to be the right for your business. Bless you, just a couple housekeeping things. Please remain muted during the presentation. At the end, we'll open up for any Q&A. I am recording this so you can watch it later on YouTube. Welcome, Pam.
Thank you. It's very nice to meet you. My name is Pam Johnson, and I'm a State Farm agent, and my friend Sterling, he's also a State Farm agent that's with us on the call. So I'm glad to be with you. I want to talk about small business retirement plans. There are a lot of plans to consider. Not everyone is the best thing for you. So, and it can be complicated too. I'm going to try to make it as simple as possibly can. But the small business retirement plans, so I'm going to, is that upside down? Oh, well, I don't know. This may not work. Can you see it? Okay, it's a little bit backwards for me, so this is odd, but we'll work with it. So why are retirement plans important for the small business owner and their employees? What types are there? How do you know which one's best for your small business? Are there fees, and how do you get started? So retirement plans for small businesses are important so you can save for retirement. You don't have a 401k if you're self-employed. So how are you going to start saving for retirement? It's up to you. You've got to take care of it yourself. So what we recommend here is, or the reason why you want to do it is so you can get some savings going. Also, so you can attract new employees. Employees are going to want a 401k. So it would be nice. It's a nice benefit to offer for the employees. There's certainly tax breaks for us employers or self-employed people. And it gives you a chance for your money to grow. The sooner you start, the better chance you have to grow your money. So what types are out there that we can put our money in? There's several of them. So I'm doing these little slides because sometimes it's hard when somebody's talking. We're visual people, so I thought this might help. There are traditional IRAs or Roth IRA. The first one is the simplest one to set up. You can simply go online and do it. You can call a professional to do it. But the traditional IRA is all pre-tax money, and the money grows tax deferred. The Roth IRA is after-tax money, so you don't get a tax deduction up front, but the money grows tax deferred, and when you take it out at 59.5, there are no taxes. So it has to do with the gains in the account, whether it's going to be taxed or not taxed between these two funds, okay? Then we have something called a SEP. So this is for self-employed people or small business owners with few employees. You can contribute a whole lot more into these SEP accounts. You can contribute, up to $58,000 in 2021, or up to 25% of compensation. So it's quite a lot of money that you can put into these. You can deduct the lesser of your contributions, or 25% of the net self-employment earnings or compensations. There are some limits. You must contribute an equal percentage to your employees. So if you have employees, when you do a SEP, if you're putting in 10% of compensation for yourself, you have to do 10% for your employees. That's a wonderful thing for our employees, but when you go and make a decision about which type you want to do, you have to decide, are you going to take care of the employees? Or if you don't have any employees, then that's, you don't have to consider that, right? So the SEP might be an option for you. Then underneath that, we have a simple IRA. Simple is an acronym. So not important that we know the acronym, but this one right here is for businesses that are up to 100 employees. So when I first started out as an agent, I had a simple for my employees, probably for the first 10, 12 years, I had a simple. And the reason why, it is an acronym, but it also is a very simple thing to set up. There's not a lot of record keeping, which is really nice. You can contribute up to $13,500 in 2020 and 2021. There is a catch-up for people over 50. It's another $3,000. So these plans are nice because you can put in more money. Whereas on the first type, the traditional and the Roth, you can't put in but $6,000. And then there's $1,000 catch-up for those over 50. So if you want to put more money in, a traditional IRA or Roth IRA may not be what you need. That's why you got to look at a SEP or a simple, right? The employee element, unlike a SEP that we just talked about, the contribution burden isn't solely on you with these simple plans. You can either set it up with 3% matching to your employees if they contribute. So if they contribute 1%, then you'll match 1%. If they contribute 3%, then you will match 3%. And that's the same is true for your account. Or you can say that I will set this simple up and I will pay all my employees 2%, whether they match or not. So these are the rules of a simple. You have the choice which way you want to do it. Okay. Okay. And then we have a solo 401k. So as the name indicates, this is for you, self-employed, no employees. You're solo in this, and it can include your spouse if your spouse is a member of the business. So this is simply creating a 401k for yourself. You can contribute up to $58,000 in this account for 2021. For 2020, it was $57,000. If you're over 50, you can contribute up to $6,500 in addition to the $58,000 I just mentioned. So this is a wonderful account if you want to sock away a lot of money during the year. You notice the difference between this, the $58,000, and if you're over 50, another $6,500 versus a traditional IRA, $6,000 plus another $1,000. You just can't put enough money in that to get where you want to go. So that's why we have these other funds. The downside to these other funds is the more complicated they are, or the more that you can put in, the more record keeping there is. Also, the more fees there are to the accounts. Second, the last one here, or the next to last, is a defined benefit plan. So a lot of people, when I say these words, we're really talking about a pension. And a pension is a lifetime stream of income. So if one works for the city, a lot of times there's a pension involved there, or the government. If one is a teacher, sometimes there's a pension involved there, but pensions are getting very, very limited with employers because they're expensive. And a lot of employers are not doing them anymore. They're just simply going to rely on the match of the 401k and put the responsibility of the retirement savings onto the employee. So if you have a 401k, you need to put money in it if the employer is going to match it, right? But there's not going to be a pension. If you are a self-employed business person and you want to create yourself a pension, you can. And it's called a defined benefit plan. You need to find a special brokerage to do this for you, such as Schwab can do these for you. There are a lot of record keeping and there is fees to do it. But it's a beautiful thing as well, and it allows you to dump a lot of money in there. Okay, HSA, that's a health savings account. Some people are using these as retirement accounts, which I, in a way, understand, but really never thought about doing it that way. The reason is because the money that you put into a health savings account, and by the way, you have to have a high deductible health plan to even qualify for a health savings account, which means the deductible needs to be over a certain threshold. A lot of people don't have high deductible health plans, thus they cannot do a health savings account. But if you're self-employed, you very well might have a high deductible health plan because it's the only way maybe to afford the premiums. So if you have a high deductible health plan, you are eligible to have an HSA. The limits on an HSA are $3,550 for 2020 for an individual. In 2021, it's going to be $3,600. So it's not a lot, but really what these accounts are meant to do is to pay your medical expenses out of pocket that are underneath the deductible. The money goes in tax-free. The money then grows tax deferred. And when you take the money out, it is not taxed. That is cool. Some people are doing these HSAs, maxing them out, and then after that, moving somewhere else, maybe a Roth IRA or somewhere else to dump more money. Even if they don't have any medical expenses to use these HSAs, they can roll them over or keep them. When they're 65 or older, they can use them for the Part B deductible on Medicare, or maybe pay for long-term care premium, or Part B premium, not Part B deductible, excuse me, on Medicare. So you don't lose the money. HSA is not a bad idea if you have a high deductible health plan. Okay. I don't consider them really retirement vehicles, but it's something to consider. So the next thing is, are there any fees on these accounts? And I went through some of that. There are absolutely fees on these accounts. Generally, the more complicated the plan, the higher the fees, because there's got to be record keeping too. So for example, for the SEP IRA, the solo 401k, certainly the defined benefit plan, there are record keeping things that have to be done with the IRS. So there are companies out there that do these types of things, or for example, Excensus is something that's available to me, can be available to you too for a 401k. And they do all of our reporting to the IRS, but we pay a fee for that. For example, it could be $2,000 a year to start one of these things. And then they also have like a $70 or $80 fee per participant, so your employee. So they're not cheap, but you know, you might be able to get what you're looking for as to the amount of contribution you want to put in there. So which one is best for your company? You know, I think it really boils down to is, what is your goal? How much money do you want to have at retirement? And then you've got to back into that. You've got to come backwards to figure out how much money you have to put in. So how old are you? How much time do you have to invest? How much money do you have to put in to get to your goal? That, depending upon how much money needs to go in there, and if you can actually indeed afford to do that, will actually depend upon what plan to pick, right? Because some of these plans, you can't put in enough money to get where you need to go. Also, do you have employees, and do you want to include your employees in the plan? So that's important as well. And just the overall expense load that you might want to pay for the plan as well. Okay. So here's a little summary. I know it might be really hard to see. And this is the limits of how much you can put in, kind of summarized on a page. So for example, if we look at the traditional IRA, the 2020 limit is 6,000, the same for 2021. A Roth IRA is 6,000 as well. The health savings account is 3,600 for 2021. The employee 401k contribution is 19,500. The solo 401k and the SEP are 58,000. Okay. And lastly, how do you get started? It sure seems really complicated. And some of these can get complicated. And in our do-it-yourself world, I can understand, you know, why you might want to try to do this on your own, but there are some things that you might consider getting a professional to help you with. You know, for example, I would never tinker with the engine of my car. I have no idea what's going on under there. All I know is the car needs to go. So that might be true how you feel about retirement plans, is all you need to know, or all you want to do, is contribute. And we want the money to grow. So ask a professional to help you. Someone that you trust. So accountants may be able to help you, or at least give you some advice over what I've just gone over. Bankers, financial planners or financial advisors, and your insurance agent. So that's what I am. Not all of us are licensed. We have to have a securities license to talk to you about these things, but find one that's securities licensed that can help you. You can set up a traditional IRA or a Roth IRA on your own if you want. You can easily do that online. And a lot of times it may take 10 minutes to set one up, you know, with Schwab or E-Trade. I don't know if E-Trade does them, but just Google it. You really can do that. Those are not complicated. How do you know which one to do? Should you do a traditional IRA or should you do a Roth IRA? Well, I think it also depends upon your age, right? If you're 59 and you don't have that much more years to save, maybe the traditional IRA would work for you. Also, what tax bracket are you in now? But if you're a younger person, you're most likely in your lowest tax bracket you're ever going to be in, because the hope is you're going to make more money and bump into higher tax brackets. Some of this tax bracket stuff that we talk about, we don't have control over. It all depends upon what Congress may do or what our president may do. They may change the tax brackets. They may increase taxes within the brackets. So we can just do the best planning that we can with the information that we have. But a lot of times there are some things that are out of our control. But I am a fan of Roth IRAs, and you can do a Roth within a 401k as well. So I highly recommend that. If your spouse, you know, is employed and you are the business owner and your spouse has a 401k, talk to them and ask them if the employer has a Roth side to the 401k, because the goal is growth. And when we grow our money, at the end, we don't want our government to take it from us, to tax it. And on a Roth, they don't tax the growth. It's a wonderful thing. On a traditional IRA, it's all taxed. Your basis, what you put in there, and your growth. So as you can see, there's a whole lot to know about this. Do you have any questions for me?